We are on the job with Andy Challenger Gray, and Christmas. Andy, what can you tell us about the latest data on job cuts?
Yeah, we tracked over 84,000 job cut announcements in February. That's up from January, and it's way up from the back half of last year. In the last 6 months of 2023, we had seen layoffs really start to fall. Companies were hanging on to people. We said this is a nice, cool slowdown of the economy and the labor market as the Fed intended. Now we're a little bit more worried. There are these big spikes at the beginning of the year that could mean that companies are feeling a crunch and that they're going to be cutting for some time if we move into a recession. There's also the possibility that these are some leftover layoffs that companies who overhired during the big spree in 21 and 22, that kind of hiring bonanza, the real labor shortage, that they're just coming back down to earth. That's the hope. Otherwise, we could see further cuts this year and a cooling economy.
What industries are getting hit the hardest?
Yeah, the biggest area of job cuts by far is the technology industry. Similar to last year, leading off the year was technology. Those companies seem to be concentrating their cuts and making them at a quick pace. We're also seeing quite a few job cuts coming out of the financial sector. All in all, these are highly paid, highly skilled jobs that are being cut from the economy. We're also seeing a bunch of cuts from industrial goods manufacturing, energy, and education.
We haven't talked about this much on the show, but what is happening with news media layoffs?
Overall, in the media sector, we've tracked just about 4,600 job cut announcements since the beginning of the year. That's a pretty quick start. It is less than we tracked last year when we saw almost 10,000 cuts in the same period. So it's fallen a little bit, but these announcements are coming really quickly, and it's concerning to a lot of people. There is a real concentration of these cuts within the media, news, digital, and print sector. That area, we've seen a 94% increase in job cuts. So while the media is composed of lots of different segments, the news industry seems to be getting hit particularly hard right now.
You mentioned there are 8% fewer cuts than last year. What does that say about the economy and the labor market as the Fed is trying to slow everything down?
It's not as high as last year. That's a positive. However, we are seeing this increased activity. If it's just a little pop and we see the economy continue to slowly cool down and the labor market continually slowly cool down, that's a pretty good sign. If this is a signal that the economy is contracting too quickly, we might see many further cuts, and that would be a very bad signal. Right now, it's only 2 data points, so it's too early to tell, but it certainly has everybody's eyes glued to these labor stats over the next few months.
Thank you, Andy.
Thanks for having me on, Angie.
Go to businessfirstam.com for where to see our show on TV.